times for the economy are hard. The Bank of England is predicting a recession for the UK economy will begin later in 2022, and it will be a long one. It is expected to last for 5 quarters, or 16 months. What exactly does that mean? In normal times, a country's economy grows and the value of the goods and services it produces increases. It usually means there are more jobs, and companies are more profitable and can pay employees and shareholders. In a growing economy, the government receives more taxes and spend more on benefits, public services and government workers' wages. A recession is defined as when the value of goods falls, and this happens for 2-3-month periods, or quarters, in a row. It is a sign that the economy is doing badly and all these things go into reverse. Every time we hear from the Bank of England these days, it thinks inflation is going to go higher, and last longer than its previous estimates. It predicts a decline of almost 1% in the size of the economy in the last 3 months of 2022, and thinks it will shrink in every quarter of 2023, predicting that inflation will rise to more than 13% before the end of the year. It blames that on very sharp increases in prices, especially for energy, with people's incomes continuing to fall after adjusting for rising prices. Banks' forecasts were too pessimistic because they did not reflect the positive impact that would come from the £35 billion stimulus into the economy later this year, a stimulus which is designed to help consumers with energy bills. Some people may lose their jobs, or find it harder to get promotions, or pay rises big enough to allow them to cope with increases in prices. Recession typically does not felt equally across society, and inequality may be increased. Those with fixed incomes are particularly likely to struggle. Usually, the Bank of England would cut interest rates if the country was going into a recession, but in fact it has just raised them because prices are rising so fast. During its announcement of an increase in the base rate of 0.5 percentage points to 1.75%, it drastically revised downwards its forecast for the economy, including anticipating that inflation will peak at 13% and remain above 5% well into next year. What the bank underlined was how much worse things are going to get, with the warning that activity across the UK economy is set to go into reverse until the end of 2023. Unemployment is expected to rise gradually. By Bank of England reckoning, 800,000 people could lose their jobs over the next couple of years. Recession in 2008, due to the financial crisis, started in April 2008 and went on for 5 quarters. The same length of recession is expected this time round. Economic trends do eventually tend to moderate and change direction. It would be naive to suppose that when the Bank of England produces its next economic report later this year, we shouldn't be braced for more bad news. If we've learned anything over the last few years, it's that the economic landscape can be widely unpredictable. Please subscribe to my channel and click the bell to get alerts when a new video is posted. You are welcome to write your comments, questions, or concerns you would like to share.